Right. Welcome, everyone. What you've got in front of you is, or what you should have in front of you is the daily chart of the dollar index. And this is picking up. And it is affecting the markets. So the dollar has been tripling down or trickling down into this support. And having hit this support and potentially pushing above this, this could prove trouble for the markets. So data this week, we've got trade balance tomorrow for the US, European jobs Wednesday. Friday, we've got some US inflation data coming in. So if this US dollar gets stoked up, particularly with inflation on the Friday number, and then we've got Fed next week, middle of next week on the 14th. And to cap it all, we've got triple witching on the 16th. Triple witching being the rollover of all the options and the futures contract, which happens at the end of each quarter. So it's could be a volatile week or so as we get through this. But just watch out for this dollar. I'm short the FTSE from this high. Looking to see because if we close underneath this main trend line here, so I've gone in at 75.80. We're currently 75.60. My stop is very tight. My stop's just above here. I'm looking for this to trickle down as we complete the year, and ultimately into next year I would look for 7,000. Maybe we're going to hit 7,000 this year if things get really rocky, but anyway, that's what I'm doing at the moment. It's a hedge because I am still long some stocks which I am shedding. Talk to you about that in a minute. So we've seen oil come off. So oil had a nice move from 73.60 right into 83, give or take a few pips. What do I think oil's going to do? I think we're reconnecting with this breakup. And I know we've got the Europeans are trying to cap the price of oil. Generally, any market manipulation like that doesn't tend to work on average. If we start closing under this 77.50, then we could tip all the way back down to the low and beyond. If we turn around here, so if we hold this breakup area of 75, 77, then I think that could turn around. It's a significant push up. So if that's wave one, this is the pullback wave two. Wave three could take us back into 85, 90. But at the moment, that is not holding. Gold. So the dollar's bringing everything off. Let's take this Bollinger Band off. Dollar's bringing everything back to earth from a really nice move off of this 3-monthly support. Pushed into the August resistance, and now we're pulling right back. So the main support would be 1740, 1750 in the gold. If we come down there and hold, great. If we close underneath that, then we are in trouble. So it's only Monday. Markets are just reconnecting with last week's support. But if we continue this push lower, then be careful, because that dollar could drag the markets right back. Let's have a look at. We'll look at the wheat. I'm not going to look at all of the commodities. Okay, so the wheat's giving up, pulling right back to the 18th of August lows. So the strong dollar is affecting everything. Well, certainly affecting these charts that we're looking at here. So I do have a small position in the wheat, which at the moment has just been stopped. So I will back off, leave that alone and let that wriggle around. But that shows you the strength of the dollar. I liked this holding pattern here up here at $7.80, but we've subsequently pulled right back. We held that 780 on volume, didn't break the trend line, and so that's pulling back further. Okay, a quick look at natural gas. That's gap down and that's pulling right back into support as well. So that looks as if that can come into 53. If we drop under 53, I'm talking into next year now, and I'm not looking at gas, not touching gas this time of year. I'm just going to let that drift lower, and anything into 40, 45 would get me interested. Because we're not even tested 53 yet. So if all we do is test 50, 53 and hold, then I will get back into that, but not this time of year. That's for next year. Right. Let's start by looking at miners. This Pan-African is not great. And the volumes are coming off as well. So we had a nice push into 18, 18 and a half. And now we are wandering around. Okay, we're still holding that trend line support, but we've got lower highs and short-term lower lows there. So unless we start to pick up and come out the top of that apex by middle of this week, that could go right the way back to 15 at that stage. Cross chart, been on a run, suffering, pulling back, I should say. Might well come back to 65, 66 at least. So you can see that trend line resistance. So if we come in and hold that trend line support still, I think this can turn around and then push back into 80 plus. But all the time we're back into this grey area. That could come lower. Don't think there's anything else. Sentiment was good. So what a contrast to Pan-African. Huge contrast. So all this lovely little move down here in July, seeing that come up from 73 right into 110 plus. Volumes, I'm not in this, but I would be concerned about the volumes in this because we're coming up on not particularly great volume. No, I take that back. Now I've enlarged that. That's not bad. We have come up. Sorry, I take that back. We have come up on reasonable volume. But it's certainly struggling up there. Yeah, it's hit. So we had a big drop from May 21. Personally, if I was in that, I'd be jumping out on sentiment. Right. Quick look at Sylvania. That's doing well. So things like Pan-African are really lagging. Griffin is lagging as well. So sentiment is streaming ahead. Hochschild had a good run. That's pulling back. But that Pan-African is really struggling. Let's across to basic materials. I'm going to look at some US stocks as well. Elementis, That's hit. So 118 is a major congestion area for this one. So this moved out nicely in early November. Lovely three-way move into that 118. So I tell you what, if that pulls back into 105, 107, that is still viable. That is, so if we ping back to this breakup area and hold, because we've had really sweet volume on this move up. So I think there's plenty of time to get in this one, because I still think this has got more in it on a pullback. It may only, typically on a big move like that, you may only come partially back into that move into 110. So I think you can justifiably get in at 110, but you're going to have to stop under 103 to see if that can get back to 125 plus. So I think that Elementis is good. TPI kept pulling back. Let's leave that one. I'm going to watch this one. I'm going to watch TPI Cap and Man Group into the new year. Commodities are struggling with this dollar, so I think it's good to. This is the kind of thing just to keep in the back pocket and come back to next year. Right, let's move into energy. Tullow. So I was suggesting oil could dip further back. So 39.40 is a good support level in Tullow. So these are good opportunities. Typically, oil drifts back into the end of the year anyway. So if you find yourself down there at 38, 39 and holding, I would definitely get into Tullow. Again, it could be one just to watch into next year. But if that does come down there and hold on volume, then I'd be interested to see how the volume's tailing off. Any market that has not got a follow through in the volume is likely to come lower. So the volume confirms that push lower. Now, Petrofact, I'm very surprised to see this one down here because the weekly is tremendous on this 1991. I tell you what, this will be a very bullish move if in the next couple of days we find ourselves back above 91. Actually, that's a buy signal. A new low in the range and immediate close above on Friday the 2nd. So that's already got a buy signal in there. If we subsequently go back above 91, and the weekly to me is great on this one. It's not unusual to see markets sit on a big pivot support and then dip underneath. If they stay underneath, obviously just walk away. But if any time soon this comes back up to 91, I think the prospects for this one are good. It's an oil services company. So as oil is drifting lower, so is this one following it. Quick look at BP, sitting up nice and high, and Shell sitting up the same chart pattern, sitting up at resistance. This iGas is another one I'll be looking at for next year. I've not done much research on this, but I will be. It's a cheapie. I'm guessing it's an AIM stock. But if we start getting above this support, it's been on a huge run this year, 110. Wow. One for the back pockets. Let's have a look at Let's have a look at housing just to gauge what this market is doing and thinking at the moment. I've been talking a lot about property over the weekend with various people, and I've been telling everyone that property is going down 30% next. So, because I believe that we are experiencing what we saw in 87, 88. In 87, 88, property peaked at mid 88 and was in the doldrums right into 92, 93 plus. So this is Taylor Woodrow, by the way. So if Taylor Woodrow knocks into that resistance up there at 112 and subsequently closes under 80, hold on to your hats. That's my likely scenario now. I think that one can punch into, what's wrong with this tool? Punch into 110, and I think that might wind down. Barratt Developments, same story. Look at the volumes have been picking up, but it's not able to climb very high on that volume. The last time we had volume like that, this Barratt Developments climbed nicely. We've got similar levels of volume and it's just not doing it. So this is distribution. This, to me, this is distribution. Classic sell in January, and all the highs since January have been selling. This is weekly, isn't it? Forgot I'd move that one to weekly. Okay, so be careful. Right, stocks I like. Let's just have a quick look at retail. Things like Boo had a push higher. If I was going to trade any retail, it would be these branded onliners. Certainly trying. If that gets above 50 anytime soon, that could do well. This is not the environment or times. Shoe Zone. I'm long since out of this. Amazed that this stock has done this. But hey, expect the unexpected. If a crappy stock like Shoe Zone can do this, then maybe something like Boo could as well. Look dead in the water to me. But this formed a channel support down there at 139. Well, I'll come back to that. Right, Sainsbury's holding up. Volume's just about okay. And Tesco. This pullback has got bought. Right. Moving on. Stocks I want to look at now. Right, start telling me any stocks you want to look at. So we've talked about these banks, or well, constantly updating on these banks. Talked about how this looked as if this could get back to 50 plus on Lloyd's. I would still support that. It's a slug. It's a real slow one. It's not hit resistance yet, and the volumes are tailing off. I mean, basically, I'm just moving into cash. I'll tell you what I've got. I've still got some IQE. but I'm going to take that off tomorrow. And then I would love to get back into 35. If this drops but holds up in January, then I will get back in. I tell you what, I mean, it's got the potential. At some stage, this is gonna break and do well. If any time soon this gets above 55, this may turn around and get up to 55 and crash in through 60. But I'm just backing off now. I'm just looking to get out. Rolls-Royce, and that's still got more to play. That still looks as if it's holding on volume, so that may go up to £1 anytime soon. Vodafone is really ill. Sat in this one a bit too long. I'm only slightly underwater on this one, but that is low on volume. I think I'll just pull the plug on it tomorrow. I'll give it one more day. If we don't close above 93, my stop's just under here anyway. BT is, I think BT's a bit of a cash cow. It's hit by strikes, I think, isn't it? I would leave BT alone. I don't think BT deserves to be down here, but the charts think otherwise. So I'm not going to argue. I do not argue the charts. Volume. And I wouldn't be surprised to see that above 125, 130. But I don't think this is the time to buy. I think you've got to be patient on that one and sit tight. QQ. This is a good defensive stock, which I'm in. We got back into last week. Volumes are a little worrying. But it is holding up. I'd need to see this above 360. It's had a good year, been in and out of this a couple of times. If we can close above this 360, then I think we can potentially crack £4. So if you're not in it, you know what? I would suggest you wait and see if that closes above 350 and then buy a pullback. Because we had a huge sell on the 11th. So unless that closes above this sell bar, I would stay put. But I very much like this stock and have done well on it overall this year. And I still think there's more to come. What else? Made notes of my. Just go back through my notes. Yeah, I know. IT. Where is it? Yeah, I'm still interested in this BYIT. I think this may come back onto this November 10th level. I would be interested if that came down to 390 from this 420 and then picked up. We've talked about this one for quite a while. This one's already gone. Pension Company Bell. Yes, that's hit 50% up there at 405. So I would wait and see if that pulls right back. Again, could be one to watch into the new year. If that comes back into 340 and holds on volume, then I would be in. Andy, you in? I think I asked you this last week. I can't remember what you said. You in dark trace? Yeah, so we're seeing there's a very, very common theme to these charts, the way they're just pulling back. No, I'm going to steer clear of that one. Right, I've not got anything else on my list. Hunting. Let's have a look at hunting. You are in dark, right? Okay. It's holding up. It's all right. Hunting oil. I would love to see that pull back into 250. Yeah, I'm certainly not going to chase that. Volumes are not great, but again, oil is something I'm definitely looking for into the new year. So just to sum up, I'm pulling out, going to end the year largely in cash. And in the early part of the year, through January and February, I'll be looking at pullbacks in energy, IT, and still financial, still backing off anything to do with the consumer, in other words, retail and housing, potentially even trying to bear raid bricks and mortar, things like Shoe Zone again anyway. I'm going to look at some US stocks. Gulf Keystone, right. Yeah, so just as we're getting into towards the Fed day on the 14th and triple witching, just being ultra cautious. Normally, in terms of the US cycle, you would normally move into the continue into the back end of the year, and then you would just wobble in January and potentially February, and then that's the normal cycle, and then pick up again and sell in May and go away. So that's what I am doing. I'm shedding stocks, shedding most stocks, if not all stocks, as I get into the back end of the year. Cash is a position. So that's what I'm doing right now. So a lot of the scanning I'm doing on sessions like this is thinking about the positions I've got, but exiting and just planning the new year already. Gulf Keystone, yeah, it's not great. So look at the weekly. It's been flat for right from middle of October onwards. So we had a buy signal here. So the buy signal at the very beginning of October, seeing a series of lower highs. So we're right, if this is a bearish consolidation and we knock into this trend line and reject it, we could come down to 169 or lower. If we can hold here, so if we dip and hold, if this is a bullish consolidation, we dip into this support and hold, we could find ourselves up there at 250 plus. Volumes are not great. but we had a good finish to November. We're still only early December. So there is potential. The only thing you can do in a stock like this, as Andy's doing, is buy a low and sit in it, keep your stop out of trouble, and just see if you get a break on volume. But if it does break to the upside, check the volume, make sure it's got volume follow through. Otherwise, that may not be sustainable. So potentially a bull flag with your mast. And so far these dips are getting bought. So we're getting into a real decision point here. Whichever way we come out of this apex is going to tell us where that wants to go. I can see what Annie's doing. I don't have a problem with this stock. You know, all these support levels have are nicely in place. So if you just buy a dip with a stop underneath these supports, your risk-reward ratio is healthy. So we are at a decision point. Right, anything else you want to look at? What's the market's doing as I've been talking? Very little. I think the oil's picked up a little bit. Yeah, so this oil, there was an engulfing bar. So the last week's weekly bar engulfed the previous week. So it's all to play for here. Right, let's take that away. That doesn't really add anything, does it? That doesn't tell you anything we don't know. So it's 82 is the key issue here. If we find ourselves above 82, then I think that's got the potential to go through 85, 90, 95. But you can see the series of lower highs in this oil. So we have been tripping lower. So 67.40 and even 60 is, if this is a bearish expanded triangle, then we could come right back into these November 21 support levels. Hence the reason why I am somewhat cautious. Well, I am cautious on oil at this stage. But the normal cycle in oil is for this to pull back in the end of the year. But this is quite a normal cycle for oil, and then to start to pull up in January, February, and pull up into the dry season. Into the US dry season, because Americans tend to jump in their cars and drive lots of miles. We haven't got Cecil in the room. Right, okay. Any other questions? Anything else you want to look at? Look at the bigger, so look at 4 hour on the oil. There was a sweet move off 73.60 into 83 last week. We had a $10 move off the lows last week in oil. So understandably, that has pulled back. Right. Thanks for your company, guys. I will. I'm going to continue to short that FTSE at the very least, if nothing else but a hedge at the moment. Let's see the 4-hour chart on this FTSE. So if the FTSE closes under 7,500, then I think we can trip lower. If at any stage we hold 7,500, get above 75.90, then that's potentially going to up to 7,800. So it's holding. It's not broken the trend line at the moment on this 4-hour chart. It's been, in fact, the FTSE has been very, very resilient. That's why I'm not going over the top on that. Right. Thanks for your company, guys. I will talk to you very soon.